Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the jargon so you don't have to. Today we're diving into something a little different, not your typical quarterly earnings, but a look at some unregistered stock sales and what the company is paying itself. It's like peeking behind the curtain of a fund's operations, and it has some interesting details about how money moves around. Before we begin, if you find value in breaking down these complex financial documents, make sure you hit that subscribe button. Also, join our Discord community linked in the description below for more discussions and insights. Alright, let's get into it. This filing is from AB Private Lending Fund, and it is talking about some recent share sales that were not registered with the big bosses at the Securities and Exchange Commission. Basically, they sold some shares of their Class I common stock to other investment groups, feeder vehicles really, that are set up to hold these specific shares. Think of it as selling shares directly to other funds that want to invest in AB Private Lending Fund's Class I shares. They're saying this was exempt from the usual registration rules, likely under certain private offering exemptions. Now, what's interesting here is the numbers. As of October 1st, 2025, they finalized the sale of about 250,527 Class I shares. And guess what? These shares brought in a tidy sum of over $6.3 million. It's a lot of money, and it tells us there is demand for these particular shares. The key here is that these are not shares you'd find trading on a public stock exchange. They're for a select group of investors, and the pricing and sale are handled differently. Moving on, the fund also declared some distributions, which is basically the money they're paying out to their shareholders. On the 20th of October 2025, they announced regular distributions. For Class I shares, they declared a gross distribution of 18 cents per share. And thankfully for the shareholders, there was no fee taken out for shareholder servicing or distribution. So the net distribution was also 18 cents. That sounds good, right? But then we look at Class S and Class D shares, and it is a big old NI day. This means that for those share classes, there were no distributions declared at this time. It's a bit of a mixed bag depending on which class of shares you hold. These distributions, whether paid in cash or reinvested into more shares through a reinvestment plan, are set to be paid out around the 28th of November to shareholders who were on record as of the 31st of October. So if you were a shareholder at the end of October, you could expect some cash or more shares coming your way soon after. Now, let's talk about the value of the fund itself. As of the 30th of September 2025, they reported the net asset value or NAV per share for each class. For Class I shares, the NAV was $25.30. For Class S and Class D shares, it was NIA. What this tells us is the underlying value of each share, based on the fund's investments. The fact that Class S and Class D don't have a NAV listed here is a bit of a red flag, or at least something to pay close attention to. It could mean those classes are very new, or they operate under different rules that don't require this specific reporting at this time. Looking at the bigger picture, the fund's total assets, what they call aggregate NAV, were about $149.9 million. They had investments worth around $307.5 million, but they also had about $164.5 million in debt outstanding. This means their liabilities are quite significant compared to their net assets. It's like owning a house that's worth a lot. But you still owe a pretty big mortgage. The fund is also currently offering shares to the public on an ongoing basis, with a goal of selling up to $1 billion worth of shares. On top of that, they've been selling those unregistered Class I shares we talked about earlier as part of a private offering. This table lays out the shares issued and the money raised from both the public offering and the private offering, excluding shares bought through dividend reinvestment plans. As of this filing, the private offering alone for Class I shares has brought in over $154 million from more than 6.1 million shares. The public offering, on the other hand, shows no shares issued for any class as of this report. This suggests that all the recent activity and capital raising reported here is primarily coming from the private placement of Class I shares. And so with that, we wrap up our look at AB Private Lending Fund's recent filings. My take on all of this is that the fund is actively raising capital, heavily leaning on its private offering for Class I shares. The separate NAV reporting for different share classes and the lack of distributions for Class S and D shares raises questions about their operational status or strategy for those classes. The significant debt level relative to NAV is also a point of caution. While they are generating a substantial amount of investment capital, the leverage and the uneven distribution of returns or even reporting across share classes suggest potential risks for some investors. It is a complex picture, and investors in these classes really need to understand the specifics of their holdings and the fund's overall financial health. Alright, that is our breakdown of AB Private Lending Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the private offering strategy is a smart move, or are there hidden risks? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.